Hey, this is Alex Astley, and it's episode 102 of Money Hacks, mid-March 2023. Admittedly, we haven't done too many of these videos this year because we have been on a roll. There's a lot going on in the financial markets and the retirement industry, and so we've been holding numerous 401k committee meetings, one-on-one financial coaching sessions. Major legislation was passed at the end of the last year that's going to be changing and enhancing 401k and 403b plans, and you'll see some of that over the course of the next 3 years. But today's video is about cash management and savings, where you're keeping your savings. Now, just coincidentally, at the end of last week and early part of this week, we've seen a bit of a banking crisis, a lot of concerns and worries about the viability of certain banks and financial institutions. The FDIC and government stepped in to backstop and provide support to those institutions. And while I don't think we're in the clear just yet, for the vast majority of us, our accounts, our assets that are held in banks, credit unions, and other financial institutions are safe. They're within or under those FDIC or insurance limits or SIPC insurance limits for investment accounts. And for most people, it's not a reason to have significant concern, but it's something to be aware of when it comes to your assets and where and how you're investing or saving those assets in various accounts. Now, that's just coincidental because we've been talking about savings accounts, cash management for the last 6+ months in particular. And not a day goes by that we're doing one-on-one sessions, that we meet with an individual or couples or a family where we think they're not maximizing or efficiently using their savings accounts and their cash management strategy. What I mean by that is having too much money in checking or in traditional bank savings accounts. Because in the current environment, we've seen this extreme increase in interest rates. And so today you can get much higher yield in return safely in cash equivalents and cash liquid savings accounts by using high yield savings accounts or money market funds. Additionally, I think there's great value in these types of accounts because they create a visual delineation between your spending money that you might use on a daily basis to maintain your lifestyle or that you can get accessible at the snap of a finger, compared to your short-term investment or short-term savings accounts and your emergency savings. Emergency savings in particular is an account that should be your cash cushion. It's a foundational piece to financial security and financial success. And ultimately, we recommend that you build up 3 to 6 months worth of your living expenses in emergency savings in some type of liquid, cash equivalent, safe account, but one that is earning interest. And today, that can mean hundreds or thousands of dollars a year in interest by having it in the right type of account. Typically, these accounts in mid-March 2023 is paying somewhere around 3.5% to 4.5% annual interest. So we think it's a really smart move so that you're optimizing your financial picture, that you're saving in an appropriate vehicle for short-term goals and emergencies, but also creating some visual sort of identification of spending accounts, savings accounts, investment accounts, and retirement assets.